Recording in progress. Make sure I'm the co-host. Bismillahirrahmanirrahim. So we'll have attendance and then we have broadcast, home, broadcast. Bismillah. Save the image, copy. Okay, let me see who is joining. Okay, Bismillah. Sadakat Khan, Ahmed Jan, Habibullah Muhammad, Mahibul Islam. MashaAllah. Habibullah. Bismillah. Inshallah. Assalamu alaikum, Brother Ishaq, Brother Sadakat, Amir Jan, Mahibullah, inshallah. We'll be starting the session after 2 minutes. Let the other people join. Assalamu alaikum, inshallah. We'll give 2 more minutes and we will start the session from then, inshallah. Assalamu alaikum, everyone, inshallah. We are going to start the session after 2 minutes. Like we are waiting a little bit more of people to join the session. Thank you for your patience. Inshallah, 1 more minute and then we will start the session. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. الحمد لله الصلاة والسلام على رسوله النبي الكريم وعلى آله أصحابه أجمعين. أما بعد, thank you very much for all of you joining us today. Uh, Relatively from the previous classes, I see a downfall in the numbers, but it's all up to you. I believe Taif have been conducting webinars at 2 p.m. So people are very much trained in that manner to attend the class. But however, we have a good number of people, inshallah. Let's start the session. Today's webinar is again IOFI CIPA exam preparation webinar. Today we'll be focusing on two paper. At the moment we have Brother Shehzad Hussain with us, who will be giving you a short lecture and telling you the importance of BRE, Business Regulatory Environment. That is the paper 3 in CIPA examination. All right. And those who are joining will inshallah benefit from the session. Without me waiting further, I will ask Mr. Shehzad to join, introduce himself, and carry on the session. Let me take a leave. Assalamu alaikum, Brother Shehzad.
Wa alaikum assalam, and thank you, Asim. Assalamu alaikum warahmatullahi wabarakatuh, everyone. I hope everybody will be doing fine. Um, Today's session will be based on business and regulatory environment. Initially, I'll first introduce myself. My name is Muhammad Shehzad Hussain, and I'm a qualified chartered accountant, that is an FCA from Institute of Chartered Accountants, Pakistan, ICANN. In addition to being a CA, I'm also a certified Islamic professional accountant, that is CIPA, from AOFI, and I've also done CISA. Basically, being an accountant and working with the big four accounting firms, I've got around 20 years experience of working with PwC, EY, Deloitte in Pakistan, in UAE, in Oman, and other jurisdictions. In the capacity of Senior Manager, Islamic Financial Service Group, EY, I've led various engagements locally as well as globally. I've also assisted AOFI, BIBF, IFAS in my individual capacity on various assignments. I've also been involved, luckily, in the as trainer with various institutions like Center of Islamic Economics, which is run under the patronage of Mufti Taqi Usmani Sahab, as a visiting faculty. Also, I've been lucky to be involved with the State Bank of Pakistan and did the trainings for Islamic banking professionals. So this is my small brief introduction. Now I'll be moving towards the paper. The paper is Business and Regulatory Environment, that is BRE. The exam duration of this paper is 1.5 hours with 65 MCQs. So it's the same pattern which all of the papers for CIPA are. I think 1.5 hours for 65 MCQs is good enough time if you are prepared. I think before me, the trainers have told you how to attempt the paper, not to get stuck on one question. If you are stuck on one question, then move on to the next one. Don't waste your time. They would have also told you that as there's no negative marking, so you don't have to leave any answer. So what you have to do is at least you have to attempt all the answers, and obviously going by the rule of probability, 25% chances that if you are doing just just you are trying to get an answer correct, you'll at least have 25% chance of getting it correct. Well, there is a mechanism also. You do the elimination. For example, if you have got an answer with 4 options, it is very obvious that 1 or 2 answer will not be linked to that question even. So you can do the elimination. So your probability increases. Anyways, the main objective of BRE syllabus is to equip the candidates with the understanding of the fundamentals of business and business management, and the role of accountant in relation to governance, checks, and compliances, and also risk management in an organization. So we need to understand that CIPA is basically sort of an accounting course because it's certified Islamic professional accounting. So you have to have a certain basic understanding and knowledge of accounting and its related topics. I'll just go through the basic course outline. So there are the basic sections are introduction to business, that will include 5 chapters: business environment, market forces, business strategies, marketing, communication within an organization. Then there are business entities. The second area relates to business entities, that will include the chapters on forms and types of companies, management and administration of a company, source and of funding and management. Then we'll have a look at the key concept of laws and key introduction to taxation. And lastly, there are 5 chapters linked to risk, like general introduction to risk within FIs, credit risk, liquidity risk, market risk, and operational and other risks. And lastly, the capital adequacy, that is Basel related things. So what I'll do is I'll just introduce a little bit what we'll be going through in these chapters. For example, in chapter 1, that is business environment, we'll have a look at the macro environment or the micro environment. That is, what does macro environment covers? That is all those factors influencing the organizations indirectly. Then we'll see the micro environment. Then we'll go to the Porter's 5 forces, that will include threat of new entrants, threat of supply products, bargaining power of customers, we're seeing the supplier's power, intensity of competitive rivalry. Then in this same chapter, we'll have the definition of sector, what is the sector, and how the government and business institutions react with each other. So basically, this chapter gives an overview of how the business interact with different forces or different environments, whether they're internal or external, whether they're micro or macro, how these environments are built. So this chapter number 1, the business environment, just gives you an overview of overall how the economic function, how the entity is set up in an environment. Then when we'll move to the second chapter, it is the market forces, in which the definition of market is provided along with how the demand and supply curve works. So it is this chapter number 2 is basically based on market forces, and it gives you a little bit touch of the economic side of things. What is the hyper competition? What is the industry life cycle? For example, industry or product life cycle includes introduction, the growth, the maturity, the decline. This is the normal industry life cycle which we face or which we observe in all the products and industries. Initially, the product is introduced, then it enters into the growth phase, then it matures, and different factors set in, and ultimately and lastly, the decline phase of that life cycle. Then, because we are talking about the market forces, we go through the SWOT analysis. I think all of us should be knowing what is SWOT, that is strength, weaknesses, opportunities, and threat. So we'll go through the SWOT analysis. Moving to the third chapter, it will include the business strategies, the definition of strategy. What is a strategy? It will tell you that strategy is the long-term direction and scope of an organization which achieves sustainable competitive advantage for the organization by allocating resources and competencies to changing environment. Then we'll see how the strategy is designed and implemented at different levels. It talks about the levels where the strategies are implemented. That is corporate level, the business level, and the operational level. Similarly, 3 elements of strategic management are discussed: the strategy position, the strategy choices, and strategy into action. So this chapter is basically based on business strategy. What is strategy? At what levels the strategy is implemented? What are the diversification results for environmental changes? Then it talks about modes of entry into foreign markets. So basically, it talks about the globalization. It talks about that there are different ways in which entities can enter into foreign markets. They could be involved in the exports. They could be involved through overseas production. They could be involved in contract manufacturing or JVs, that is joint ventures. Then from the chapter 3, we move to chapter 4. That would be the marketing. It gives you the definition of marketing, and it tells you that nowadays the businesses are moving away from the push marketing to the pull marketing. So there will be 2 different terms which will be used. The push marketing means promoting products and services to the next party in the distribution chain. That is, there is a distribution chain. The manufacturer is there, the wholesaler is there, the retailer is there, and then the customer is there. So the push marketing means the person at the last end of the distribution chain try to sell it product to the next level, and then the next level will sell it to the level above it. So everybody will try to sell it to the next level only. Whereas in the pull marketing, consumer demand pulls product and services down to the distribution chain. That is the complete marketing based on the end buyer, end user. So ultimately, if the end buyer or end user has the demand or need of that product, the whole distribution chain will automatically will buy and purchase and stock these kind of things. Then after this, we'll see the marketing mix. Basically, we all know comprised of 4 P's: the product, the price, the promotion, the place. Lately, this 4 P's have been translated or edited to 7 P's. 3 different P's have been added. That is, people, processes, and physical evidences for services. Then in this chapter, we will see the concept of social marketing. Social marketing applies to marketing principles to resolve social issues by influencing how people behave. Then we'll see the branding and how the branding is done, what are the principles of branding, at what levels branding could be done. After that, we'll go through the e-commerce. What is e-commerce? E-commerce is doing business transactions through electronic means. So after that, we'll go through the chapter 5, that will be communication within an organization. This chapter basically tells us how different people in an entity communicate with each other. It could be person to person, it could be function to function, or it could be cross-functional. So basically, communication is a process of exchanging information from one person to another. Then we'll see that there are different communication networks available. The chain network, the Y network, the wheel network, the circle network, and the all-channel network. And just speaking about the all-channel network, it is everybody communicating with each other. So obviously, chain network will have a chain effect. The all-channel network everybody will be communicating with each other at different levels. Then the communication process is a guide towards realizing effective communication. We speak about different elements of this process. Obviously, the sender, who's got the idea to communicate, the encoding, that is bringing into words or transferring that idea into something concrete. Then the medium channel, it could be email, it could be telephone call, it could be a report, it could be using the notice board. Then it will be decoding. That is, that message or communication is basically for some intended person. So that person will, will try to decode that message, try to understand that message. And then the receiver, that person who is receiving that message. Then we'll see that there are 2 types of communication: verbal and non-verbal. The verbal communication usually includes the written communication as well as the spoken. So verbal communication means anything which uses words. Then the non-verbal is basically body language and gestures and these kind of things, which is very important in case of business or interacting with different people. At the end of this chapter, we'll be going through how the communication relating to the management of HR is done and what is the importance of HR management. That is basically HR's role or aim is to cultivate positive employee relationships, encourage goal setting, and limit turnover. That is, less people should leave your company or entity, and you should be able to retain the good resources. Moving towards the second session, that will be based on the business entities. It will talk about the different business structures. For example, in chapter B1, different forms and types of companies are discussed. In the private sector, there are 2 types of companies. One that try to seek profit, and the other is NPO or a non-profit organization. Whereas in the public sector organization, there are also two kinds of entities. One that provide public services, and the other is the businesses which are run on commercial terms by the state-owned entities. Then you'll see that in case of businesses, there's a very important role of a promoter. Basically, promoter is type of an agent that brings the company into existence. As an agent of the company is liable to any contract in which it is deemed to be a party. Then we'll see the documents that are need to be delivered to the registrar for company to become registered. It will include application registration, memorandum or memo of association, articles of association, statement of proposed officers, statement of compliance, statement of capital and initial shareholding. Okay, we need to remember one thing. This whole chapter or this whole syllabus is basically based, not based, but usually refers to UK laws. Obviously, every country will have their own set of rules and laws, but as a basic principle, this subject or this course usually refers to UK law when it's talking about the law or regulations or legislations. So we need to remember this thing. Then it will give you the different types of shares. What are shares? You all should be knowing it. The shares are transferable forms of property through which the interest of a member of a company limited by shares is measured. Capital is referred to as issued, allotted, or called up share capital or loan capital. Then in chapter B2, we'll be going through management and administration of a company. We'll see that this chapter gives us definitions and basis how the departmentalization is done, how departmentalization is done, and what is the organizational culture. When the organization is broken up based on the departments, it's the grouping of the tasks and people in a rational manner, which aims to facilitate successful operations and to create an environment for effective performance. Talking about the organizational culture, it is a set of beliefs, values, rituals, and symbols, which basically tell you about the company or the entity. There are different types of organizational cultures. There's a king culture, there's autocracy culture, there's hierarchy culture, there's the market culture. So basically, clan culture is what we talk about in the family businesses. So it's run like a family business. It won't have that much structured things, organizational structure, SOPs, defined JDs, that's job descriptions. So it is called the clan culture. Anyways, moving forward, effective committees are defined in this chapter, telling us the importance of different kind of committees. It also tells us that there are different advantages of committees. Effective committees provide continuity of performance and allow for the sharing of new ideas. So it talks about the committees. Then in chapter B3, we'll speak about source of funding and management. Again, we are still on the area of the business entities. That's section 2 or section B is on the business entities. So basically in this chapter, we'll be discussing about source of funding, what are the sources of working capital. It could be short-term loans, lines of credit, asset-based financing, trade credit, inventory financing. It could be different kind of financing. Then we talk about what is the working capital. Working capital basically refers to the funds of an organization required to conduct its daily operations. Then it talks about the gearing. Gearing is the measure of the amount of debt finance that an entity uses relatively to its equity finance. It's the ratio between how much as an owner I've bought in my money and how much I have obtained from the market or the banks or different people as loan or as financing. Then we talk about the cash budget and how important the cash budget is. We should remember that keeping the adequate level of cash is usually understated. Even the profitable business may go down just because they didn't maintain the cash level. The profits were there, but the cash flows were not managed properly. So they were not able to pay off their liabilities and whenever they fall due. So it is very much important to maintain adequate level of cash. That is also discussed in this chapter. Then we move to this section C. Section C basically talks about the law. It tells us what is law, what are different legal systems in operation in this world right now. Common law, civil law, Sharia law. When we talk about the laws, we need to understand that even for the international trade, there are different kind of laws or agreements in place. UN Convention on Contract for International Sales of Goods is there that applies to contracts of sales of goods between parties whose place of business are in different states, different countries. Then a contract for the international sale of goods is formed when a valid offer is validly accepted. A breach of contract will occur when a party to the contract fails to perform their obligation under the contract. Okay, now we need to remember one thing again. Yes, as I told you before, that this course or this area is basically based, the law and everything is basically based on the UK law. We need to remember in this course, we'll be discussing many concepts which are not, which might not be Sharia compliant, but we must know those concepts. And then in this course, we'll be discussing the Islamic or Sharia compliant alternates also of those concepts. So we should remember that whatever we are going through in this course, it's not 100% Sharia compliant. We'll be discussing different concepts. So those concepts usually will be relating to the conventional side of things, but we'll be obviously discussing the alternates which we have. So this was important that we must remember this. Then in chapter D1, it's basically introduction to tax. So we'll go through the tax. We'll say what is tax, what is the good system of tax looks like. It should be efficient, it should be equitable, it should be understandable, flexible, transparent. Then we see there are three different kinds of tax regimes. It could be regressive, it could be proportional, it could be progressive. Regressive is when, for example, in case of VAT is basically, or sales tax is basically regressive. Regressive means I'm earning less, somebody is earning more, but we'll both will be paying the same amount of tax. The proportional will means that everybody will be paying proportionally. If my income is 100, I'll be paying 10. If somebody's income is 200, you'll be paying 20. Progressive means it will be incremental. This is usually how the tax system in the world works, in most of the countries at least. That is, if I earn more, my percentage of tax will be more. If somebody earns less, his percentage of tax will be less. Then we'll be discussing two of the most talked about concept basically in tax, the tax avoidance. What is tax avoidance? Tax avoidance basically refers to the legal method of minimizing one's tax burden. Whereas the other concept, the tax evasion, is the illegal act of deliberately misleading the tax authorities. Then we'll see with the tax incidence. That is the manner in which the burden of tax is distributed among consumer, producers, employees, and employers. Then we'll also see that high taxation in an economy can result in this incentive effect. That is, people will start moving from one place to another. The brain drain will start occurring because they are being made to pay more tax as compared to what benefit they are getting. Then we'll see or discuss the tax-free zone. What is tax-free zone? What kind of advantages a tax-free zone gets? Okay, then moving to the last part of this course, it is basically risk. It will include the introduction to risk within financial institutions, what it will give you the definition of financial institutions, what financial institutions actually do, how the risk management is done, what are the financial regulations, what affect the global financial crisis of different times have taught us about the risk and how it needs to be managed. Then, as financial regulations vary from country to country, financial institutions must be aware of the changing local, regional, international regulations as well, because they are working cross-border. Then we'll be discussing different type of risk. We all know that there are different kind of risk. It is a credit risk. So the credit risk is a potential that a counterparty fails to meet its obligation in accordance with the agreed terms. We'll see the 5 C's of credit risk: the capital, the capacity, the character, the collateral, and the condition. Then we'll see how the credit risk can be assessed. It could be assessed through experts. It could be assessed through credit rating agencies. We have all heard about the credit rating agencies, and then there could be a credit scoring techniques. Then we'll move to the second type of specific, that is the liquidity risk. We'll see what is the liquidity risk. Liquidity risk is the risk that a business may not meet their obligation when they fall due because of the insufficient fund. So they are not able to pay off. Then we'll talk about the Basel III frameworks, how it aims to ensure maintenance and stability of funding and liquidity products of profiles of the bank. There are different ratios which we'll be discussing. There's a current ratio which we have. Obviously, if we are from the accounting background, we know how the ratios are worked out. What is the current ratio? What is the quick ratio? There are a couple of new ratios which Basel III has provided us: the liquidity coverage ratio and the net funding ratio. So basically, financial institutions need to have a sound process for identifying, measuring, and monitoring and controlling liquidity risk. Then in this chapter, we'll discuss that Islamic financial institutions face more issues in managing liquidity because there are lesser options available to Islamic financial institutions as compared to conventional ones. Then we'll discuss the common Islamic short-term modes of finances that will include commodity Murabaha, Sukuk al-Ijara, interbank Wakala, interbank Mudaraba, interbank Musharaka. Then we'll see how the regulators of Islamic institutions are working on different kind of products to help the Islamic financial institutions. The next risk in the list of risks will be the market risk. So we'll discuss what is the market risk. Market risk is the risk that the value of an asset or the overall market will change due to economic conditions. We'll also discuss the equity price risk. So basically, it's a market risk that the fair value of equities decreases as a result of change in the levels of equity indices and the value of individual stocks. Then we'll see what is the commodity risk or what is the interest rate risk. We need to understand that due to increased globalization and the nature of interconnectedness among markets, financial institutions are facing increased foreign currency risk as their operations go beyond their home country. So they must remain alert to the currency fluctuation in order to manage their foreign currency risk. Then, lastly, we'll be going through the operational risk. So operational risk is the risk of loss resulting from inadequate or failed processes, people, systems, or from external events. So Basel III basically define this legal risk but exclude reputational risk. Islamic financial institutions face certain specific operational risks, including Sharia non-compliance and fiduciary risk. So these two risks are discussed in detail in this chapter that are in addition to the normal risks that the conventional banks faces. It also emphasizes that the operational risk policy should be there in a proper way. It also talks about the scenario analysis, that is considering the risk from events that are yet to happen. So it plays up the scenarios. If this happens, this is the risk, and this we need to manage. Then it talks about the equity investment risk. So basically, equity investment risk is the risk arising from entering into partnership for the purpose of undertaking or participating in a particular financing or general business activity. Then it talks about the rate of return risk. So basically, it is specifically important in case of IFIs. When we talk about the rate of return risk, it basically gives rise to displaced commercial risk, as Islamic finance may be pressurized to pay a return that exceeds the rate that has been earned on the assets financed by investment account holder. So basically for that, PER and IRR are used as reserve, that is profit equalization reserve and investment risk reserve. So I think we would have gone through the PER and IRR in different courses in detail. Lastly, we talk about the capital adequacy. So it talks about the Basel 2, it talks about the Pillar 1, that is minimum capital requirements, Pillar 2, supervisory review, or Pillar 3, that is market discipline. It also gives us the capital adequacy, that is, it is measured by examining the financial institution's primary capital, its assets weighted by risk. Then it talks about the regulatory capital, how it's divided into 3 tiers of capital. Then it tells us that risk weightage assets contain the following exposure, that is credit risk, market risk, and the operational risk. Also, it talks about the capital requirement standards for Islamic banks have been developed by adopting conventional Basel approaches. Only the major difference between the Islamic and conventional banks relates to the investment accounts. So this is a small, very speedy overview of the course. Okay, we need to understand that we have got 16 chapters in this course. We have got at the TAIF, we have got the video lectures for each and every chapter. We have got the presentation, that is a PowerPoint presentation. We have got the course material, that is the course book available with us. We have got the scenarios in the course book. We have got different scenarios explaining in more detail. Then we have got the MCQs available in the course as well and on the site as well. So basically, we have got 4 or 5 different resources to work on this course. One, it will be the lectures. Second, the presentations. Number 3, obviously, the course book. And then then there will be the MCQ or the questions will be available. And then in the book, other than the text, there are the scenarios, detailed examples in the scenario. So we should refer to those as well. So this is a brief overview of the course. Now what we'll be doing is, Ethan, I think we should move to the next phase. We'll just start having a small poll.
So we'll be having a start polling, and then people who are already taking the course with TAIF, welcome to you. People who have not taken course with TAIF and are planning to take, or they are giving exam, or they are joining just for the knowledge, please feel free to participate in this poll so that you can assess yourself. So nobody is going to judge you. Your name will not appear. So let's start the session, inshallah.
So what we have done is, we have from each chapter tried to bring out a couple of MCQs in similar fashion as they should appear in the paper, same structure. So everybody, whether you are appearing the paper in the exam, or you are just for the understanding purpose, or you are thinking about appearing in future, just you guys can do the poll. So as in the exam scenario, there is no negative marking. So please go ahead.
So 1 minute is over. We have ended the poll. Shazad, you may continue. What is the right answer, and tell the people so that we can continue for the next question.
Okay. Just open the question. So I think okay. Bargaining power of customer is high, except where. So I can't see the side. So okay. Majority has selected B and D. Just give them 30 seconds more. Okay. Uh,
We have relaunched the poll for the same question. Please feel free to answer.
yes.
All right. Should we end the poll?
Yes. Now we can end the poll. So the right answer. So the question is bargaining power of customer is high, except where substitute products are not available. So it's more of a generalized general knowledge, because if I have to buy something and the alternate is not there, so I don't have the power. For example, if I need to have something to eat and there's only one outlet there, so I cannot say, okay, I'll go to buy it from somewhere else. So basically, if the substitute products are not available, the customer's bargaining power will always be low. Right. So I think we can move to the second one.
All right. Here's the next question. Thirty-second left to end this poll. Please answer. All right. We are ending this poll now.
Okay, interesting. Interesting. Okay. So basically, this chapter speaks about different kind of stakeholders, different categories of stakeholders. Right now, we are focusing on the stakeholder which needs to be satisfied, needs to be kept satisfied. These will be the stakeholders who will have low interest in high power. For example, the regulators or the government. So they need to be kept satisfied. They have got high power, but they don't have interest in running the business. So these are the category of stakeholders which needs to be kept satisfied. Yes, and you can move to the next one now. So the question is, the diminishing marginal utility is the dash phenomena stating that the consuming one additional unit of good leads to a lower degree of satisfaction than that which was obtained from consuming the previous one.
So here are the results.
Okay, so yes, obviously the right answer is D, that is theoretical. The reason being that it cannot be a real number that, for example, I ate one apple and I was satisfied to 80%. Then when I ate the second apple, I was actually satisfied till 70%. So it's a theoretical working, it's theoretical units. So the right answer is D, theoretical. Okay. Next question is the strategic group analysis refers to. The main objective of doing this poll is to give you an idea how the exam works. So you know how it works, what kind of question on which pattern question comes in, and how you need to be prepared for these. Okay. Okay. So before giving the right answer, I think time is up.
Yes, yes, the time is up.
Okay. So before giving the right answer, we need to understand that strategic group analysis aims to identify close competitors with similar strategic characteristics or similar business models. So strategic groups are defined by several common strategic traits that may example geographical coverage, that is, they are covering the same area, the product diversity, the pricing policy, the product quality, the distribution channel, or the target market segment. So the right answer is D, that is identifying firms with similar strategies or competing on similar basis. So strategic groups analysis basically refers to the competitors of similar kind of companies together and then work on their analysis. While you guys are answering, I'll keep talking about certain things. Basically, if you have a look at this course, so this course is basically you need to have a bit of idea about accounting because you'll be talking about ratios or the balance sheet or this kind of thing. Not very advanced, but on the basic level, you need to have an idea about the balance sheet, the ratios, these kind of things. Then it touches a little bit about the economic side of things, the demand and supply, these kind of things. So you need to have you'll develop a little bit of idea about the economics as well in this course. Then then about the organization or the corporate structure, how the companies are formed, how the funds are raised, how the working capital is managed, how the communication within a organization works out. So this course is a combination of various topics. And then lastly and most importantly, the risk side of things. So this course is blend of 3, 4, 5 different things, which out of which maybe if somebody is coming from accounting background would have a good idea of accounting, but not that good idea about the economics. If somebody is coming from economic background, he might not have a good idea about the accounting or the risk side of things. So you need to understand this. There are 4 or 5 different areas, out of which 3 or 4 areas you should be strong at, or you'll get strong once you go through the course. Okay, so okay, yes, I think majority has answered this correctly, more than 90%. So that is answer is C. The corporate level is where the top management directs overall strategy for the entire organization. Fair enough? Okay. Then, SM, next question, which everybody has answered it correctly, so no need to discuss it further. Next one is in Porter's generic strategic model, a focus strategy involves. Again, while we are going through these MCQs, we need to understand a couple of things. One is few of you would be appearing in this attempt, few of you would be appearing in future, and few of you would be here just to have a feel of things. So in any case, again, for example, like the last question, the last MCQ which we saw, it was very general knowledge sort of thing. It was made very generic. You could attempt even if you haven't gone through the book. So again, it's a technique how to attempt these MCQs. Okay. Again, number one, you first eliminate the completely wrong answers. Out of four, it is not possible. Or you try to understand. For example, in this MCQ, you might not have read the Porter's generic strategic model, but it speaks about focus strategy. So you pick up a word, the focus strategy, and then you try to understand and you see where it fits. So before we move to the answer, I need to discuss the focus strategy. The focus strategy will ignore most product markets and focus solely upon a particular niche. So basically, the focus strategy is focusing only on a specific thing, that is selling to a narrow customer segment. So the right answer would be B. Okay. So, SM, you can move forward to the next one. So the next one is the marketing decision makers in a firm must constantly monitor competitors' activity, their products, prices, distribution, and promotional efforts. Because, wow, great. Okay. So everybody has answered correctly. A marketing mix basically refers to the combination of marketing inputs that affect customers' motivation and behavior. So initially also we discussed that the four P's, the product, the price, the promotion, and the place. And then we saw there are three more features on the service side of things. That is people, processes, and physical activities. So yes, the answer is D is correct.
So we'll run the poll for 30 seconds now, more faster. We won't be covering fast all this session because after this, I'll be having next session with Sister Safina, inshallah.
So even as in if you don't complete, it's okay, because the thing is the main focus is not to complete the MCQs, but to understand how it works, how the paper works, what is the thought process behind it, how we need to prepare for those questions. So it's okay because we are not covering the whole thing. So it's okay if we are left with, but the concept and the understanding needs to be clear that how we need to prepare. Okay. A marketing plan is a collection of specific again, see, it is, again, it's based on general knowledge as well. If you're talking about the plan, it is linked with your actions. So obviously, answer D is correct. That is, a marketing plan is a collection of specific actions, what we have to do to achieve something. Next. A group discussion of a real life situation with in a training environment is a discussion, B, a listening, a case study method, D, all of the above. So basically in this chapter, we discuss about different kind of modes of communication.
So we'll be having the right answer.
Yes. So in this case, a group discussion of again. Now in this case, there could be two correct answers. Yes. A group discussion of a real life situation within a training environment is obviously it's a discussion because everybody is discussing. It's not only listening, it's not anything else. So in this scenario, it could be discussion, it could be listening, it could be case study method, it could be all of the above. So in this scenario, the answer would be all of the above because a group discussion is few people will be talking, discussing, few will be listening, and they are discussing a specific real life situation within a training environment that is a case study method. So the correct answer would be D, all of the above. Uh, okay, a type of network in which each member of the group can communicate with only two other members in the group. So we talk about the different kind of networks very briefly. It could be a chain network, it could be a wheel network, it could be all channel network, it could be circle network. Okay. So basically, in the circle network, each member of the group can communicate with only two other members. This network is symbolic of horizontal and decentralized communication. Every member is given equal opportunity to communicate and all face identical restrictions. The right answer is the circle network. So I think we'll just take a couple of questions more. We'll pick up a couple of MCQs more. Then we'll. What makes a limited liability company attractive for investors over sole proprietorship or partnership business? I think they cannot view the question. Can you do something? Or I'll read it. What makes a limited liability company attractive for investors over sole proprietor partnership business? So why people go for limited liability companies as compared to sole proprietorship or partnerships? Okay. So the right answer would be basically C. The reason being that unlimited liability of investors, owners, or partners in a sole proprietor or partnership business uh, attracts them towards the limited liability companies. So in case of sole proprietorship, they're completely liable for everything. In partnership, they are liable for everything. But in a limited liability company, their liability is limited to their capital only. So the risk is covered. Uh, Okay, the next one is a tertiary sector contains industries that processes raw materials needed to produce finished goods using the output of the primary sector and is therefore more commonly known as the manufacturing sector. Is it true or false? So in this chapter, three types of sectors are discussed. So once you are done with it, I'll just okay. Okay. Before giving the correct answer, the three sectors are the primary sector, the secondary sector, and the tertiary sector. The primary sector means the agriculture and mining industries, the basic raw material ones. The secondary sector basically includes how where the furniture is made, or the cars are made, or the textile industry where clothes are made. And the tertiary sector basically includes entertainment, telecom, tourism, professional services, real estate, healthcare. So the answer would be false. Okay. So basically, it was the definition of the secondary sector. As in now, you can stop now. Yeah. Okay. Um, I think we have run out of time.
Ran out of time. Ran out of time. No,
So
no
what we
problem.
do is,
You can do the closing remarks and no
yes.
problem. Yeah, take your time.
So basically, uh, whatever question you have, you can drop in the question and they will be answered. For the ones who are thinking about attempting CIPA, um, they should, they should think about it, consider it seriously. The Islamic financial industry, you need to, it's one, maybe I'll say it's the best qualification which we can have, because it touches on various aspects now. It is very structured now, and it's not only um, restricted to a certain area. So I hope you guys will be, either you guys have already registered yourself or you registering yourself. It was just a very speedy snapshot of what this course covers, or how we have gone through this course. Obviously, in our time is not enough, but I think you guys would have gotten a taste of what this course contains, or how it is done, or what is expected at TAIF, or what you'll get TAIF here. So hopefully I'll be seeing you guys on the course side of things, and whatever questions or whatever uh, ambiguity you have, you can drop in a mail or a message, and obviously you'll respond immediately. So looking forward to seeing you guys again. Thank you, everyone, and good luck to whoever is appearing in this time.
Thank you very much, Brother Shazad, for your time for spending, and I believe whoever have understood will have a clear understanding of how CIPA is structured. You explain what are the chapters covering overall, and then you give them a glimpse of Q&A, what they can expect in the examination. So thank you very much for your time once again. People who are still waiting, I would tell them that we have Ms. Safina Shahid, who will be doing audit assurance and ethics from now onwards, and then she will explain what she's covering in the lecture, and then perhaps asking you a couple of questions to see how you are evaluated for the exam. So Sister Safina, I would like you to take the lead from here onwards, and let me take a leave from here, inshallah.
Thank you very much, brother. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. I welcome you all to this session. I'm aware that almost all of you have been taking sessions since yesterday. or even day before that, you've had already 3 sessions, you have an exam coming up, and time is short, what I'll do is I won't take a lot of your time and, make you anxious to just leave this session and get to your books and your questions. First of all, let me introduce myself. I'm Safina Shahid. I've done CA, CIA, CIPA, and CSAA. I've been part of the professional industry of Islamic banking and finance for the last about 10 years, 12 years in audit firms and in banks also. I have worked in Sharia audit for about 7, 8 years. I've worked for Islamic financing advisory for about 3 years. So it has been quite a vast experience, and it has given me a huge opportunity to learn more and more about Islamic banking and finance. So here I am right now to guide you all throughout this session. SIPA, let me just share the presentation with you, and then we can get on with the preparation session for the examination. All right, so I hope the screen is visible to everyone. Okay, so as you can see, we are in the session for exam preparation for the Certified Islamic Professional Accountant examination by AOFI, and I will be covering with you the Audit Assurance and Ethics module. Till now, you would have covered the financial accounting and reporting, business and regulatory environment, which is just being done by Brother Shahzad, and the Sharia standards and Sharia governance session. So the only part remaining is audit assurance and ethics, which I'll be taking you all through. Total examinations in this CIPA certification are 4, and the passing percentage is 70% for each module. The exam is based on MCQs. The MCQs cover theoretical and scenario based questions. There's no limitation on the number of attempts, and examinations these days, I believe they're online or they're physical. It depends on the jurisdiction and the location you're at. For each of the 4 papers, the exam duration varies from 1.5 hours to 2 hours, and the total questions are from 65 to 100. For the Audit Assurance and Ethics module, the scope is the textbook that is provided by AOFI, the CIPA textbook, and the exam will have 65 questions, which will be covering theory and scenarios both. The duration will be 1.5 hours, and the passing percentage is 70%. Now, when you talk about how each section, how each subject fits in towards the whole exam, audit assurance and ethics module is about 20% of your examination, is about 20% of your complete marks. So it's not too little and it's not too big, but it is important enough and relatively easier than the other 3 modules. So you'll find that audit assurance and ethics module is mostly just knowing the concepts and being able to apply them to scenarios. So it is, I call audit assurance and ethics just application of common sense. When you know the specific terminologies, when you know the specific concepts, then its application is just common sense, that what would I do in this scenario? What would work best in this scenario? So it is by far, in my opinion, the easiest section of the whole CIPA examination. Now, the course outline of this paper, I have divided in my the whole preparation course videos. I had divided the course into 4 modules, into 4 parts. Code of Ethics, then Module 2 was based on the basics of assurance engagements, internal and external audits. Module 3 was based on client acceptance and retention. Module 3 is basically specific audit processes and procedures. So in Module 1, we studied about the code of ethics, the governing principles. Then in Module 2, we studied the basics. of each type of assignment, what is assurance, what is audit, what are the differences between external and internal audit, and all this matter. In Module 3, there are specific audit processes and procedures, how an audit starts till how it ends. So, from the first point, that is the client acceptance and retention, either you're doing a new client or you're repeating that client again. So, it's client acceptance and retention. Then the steps move on to audit planning and strategy, where you design the whole audit and you make a strategy of how this audit will be executed. Number 3 is risk assessment, where you identify the critical areas, the significant problems, and understand the entity, understand the environment, everything, so that you can find out what needs to be done to what extent, what procedures need to be applied, and how much they need to be applied. For that, risk assessment. And then there is audit evidence, that is gathering the actual evidence and performing those specific audit procedures, those steps that were designed in the audit planning and strategies phase, executing those steps and gathering the evidence on which the opinion will be based. Module 4 is then based on audit conclusion and reporting, where the auditor is reporting on the audit evidence obtained, is giving his opinion. Now, that can be internal audit or external audit. In internal audit, there would be recommendations, suggestions. In external audit, there will be an opinion involved. So, the fourth and the last stage of an audit is the audit conclusion and reporting. I'll go through the whole syllabus, outline chapter by chapter, topic by topic, and highlight the key areas studied in each topic. Also, along with each block, we will be solving some questions so that I can get an idea of how much you have understood. And these questions will highlight the important areas of a chapter. So let's begin. And I hope I will not be taking up too much of your time. I know I've given exams not too not too early away, and I'm very much aware that before the exams, people are just anxious to get on with it. So let's start with Module 1, which was Code of Ethics for Professional Accountants and Auditors. Now, how did we study that? How was my video based? My video was based on explaining the concepts, on explaining each and every basis of ethics, on each and every aspect of ethics, and then giving examples of how those aspects were applied and practical approaches. What were the key takeaways of those sessions? There were 3 videos in this whole module, and they were based on the code of ethics, what it is, what is the importance of code of ethics, why do accountants and auditors need to have a code of ethics? Because their opinion, their suggestions are the basis on which external stakeholders take their decisions. If an auditor's report is not according to the ethical principles, then the stakeholders' decision might be wrong. So they trust the auditors to give a correct opinion. And to give a correct opinion, the auditor must comply with all those ethical principles and objectives that were mentioned in the lessons. So that was the importance of code of ethics. Then we studied the fundamental of ethics. We studied the code of ethics issued by AOFI and the code of ethics issued by International Ethics Standards Board for Accountants, that is IESBA. And we studied that in the code of ethics, when we match these 2 code of ethics, we find some common things. What are those common things? Those common things where the auditor is supposed to be objective, is supposed to be free from bias, is supposed to be independent. There's professional skepticism involved. There is professional due care involved. There's objectivity. So all these principles are based on the code of ethics issued by these both organizations. And we had studied all these principles in detail with examples at how they can be applied, what are the scenarios where they were not being applied, and what were the consequences. We studied about the various threats that are faced by an auditor, which were the self-review threat, conflict of interest, there was this independence threat, there was this self-interest threat. So these were the threats that we studied, which are faced by an auditor in their normal routine, in their work, and how to eliminate them. What are the safeguards that can be applied over each threat? There were various practical scenarios, and we had studied how each threat came up in that scenario, what safeguard, what precaution could be applied to bring that threat to an acceptable level, or if there's a case where no safeguard can be applied. Just let me give you a small example. You are the audit manager of in an audit firm, and you're going to audit an Islamic financial institution, let's say ABC Bank, and that bank's CFO is your spouse, is your wife or your husband. Now, this is one self interest threat. This is one familiarity threat where the key personnel of that your auditee is your family, is has a relationship with you. And now this is a threat which cannot be reduced. Of course, I would not go around, separating from my spouse for the sake of an audit. So this threat cannot be reduced. So this was where the auditor had to refuse the engagement. The audit manager had to excuse himself or herself from the team and let someone else do that assignment. So these were the type of scenarios we had studied in the videos where threats could be reduced, where they could not be reduced. So this was module 1, which is a good 15% of your whole syllabus. So let's do some questions, I would say. This is question 1, and we have the poll available. So I want you all to give an answer. What we'll do is we'll have each question for about 30 seconds. So I want you all to give an answer within 30 seconds. Okay, I'll give another 5 seconds so that I can have some more answers. We have just 8 answers till now. All right, great. So all those who have answered option A, can any one of you explain why?
So, if anybody wants to answer, can raise hand, and we will unmute him to have a chat.
All right, if you're not comfortable in answering live, maybe you can type in the chat box. But I would like to know, why did you choose this answer option A? Okay, so we'll leave this answer for. Okay, I have some answers coming in. So let me go to the answer. The answer is self-interest threat. Now, why was this self-interest threat? Because if it is not made under normal lending procedures, that means that there were some procedures, some terms and conditions that could have benefited the person who was making that loan or guarantee, the person who was responsible for it. So there could be a self-interest threat that I could benefit from it. Now, conflict of interest could be there, but it is a wider term which includes all of these three threats. It includes hindrance, it includes self-interest, and it includes self-review also. So if I go more specific, self-interest would be the correct answer. So now this question was just an example to show you that in the examination, you will find questions in this manner also, where you will think that, okay, this can also be the answer, this can also be the answer, and this can also be. So there would be three answers resembling, and you will be confused with that. Go for the most specific answer, most drilled down answer. For example, as I just explained, conflict of interest is a wide umbrella. It comprises of everything of all those other three options. Now, if I talk about which of these three specific options would be applicable on this scenario, it would be self-interest. So go for the most specific, most detailed answer you can give, and not just a generic answer. Okay, so let's go to the next question. This is the second question, and we'll have a poll for this also. Okay, so I have 7 people who've answered 8, and I'll wait for 10 answers. Okay, so I have 9 people who answered, and majority of them went for A, and some of them went for D. I would like someone to explain, all those who answered D, I want you to explain why did you choose this option. Can anyone tell me about it?
If anybody wants to speak, just raise hand and we can unmute you and you'll be able to speak to the trainer.
Is there anyone who answered D who's willing to explain why was that option chosen? Okay, so I'll just go to the answer and we'll talk about it. But I would like you all to participate in this session, because my way of exam preparation and my way of explaining things is having people contribute in. So I would very much like people to contribute in. If you do not want to speak up, all right, you can use the chat box for the answers. Okay, so the correct answer is, it is a state of mind that creates confidence in the auditor. Because the important part, what was it? It was this. Which of the following is not correct? People must have missed out this not correct part. So this is another technique of question framing that is used by AOV, where the question might confuse you a little. Now, option A, option D, all these are correct about independence of mind. So had I asked you what is the correct statement, or what does independence of mind implies, option A or D would have been the correct answer. But in this scenario, it is which of the following is not correct. Not correct is option B. All the other three scenarios, they are true with regards to independence of mind. So this is one thing that we all need to focus on. Read the question word by word very carefully to understand what the question wants from you. What is its implication? We do tend to skip some words in between. People would have read correct, independence of mind, all right, independence of mind means option A or option D. Let's go with it. So spend time on reading the question and reading each option word by word very carefully. Okay, so now that was about module 1, which was 15% of your syllabus. So, and through these two questions, I have showed you two question framing techniques that AOFE uses and how you can get confused or mixed up around it, and the technique to approach those questions. Now, module 2 had assurance engagements and external and internal audits. In these videos also, I used discussions, explanations of all the key concepts, of all the key terminologies, and then examples and comparisons. We had also studied a comparison of external and internal audit, which is very important. And we have studied the practical approaches in limitations, in steps, everything. So if I go line by line, what we studied and what is most important in these two sections, we studied the elements of an assurance engagement and the types of assurance engagements, the definition and objectives of external internal audit, the importance of external internal audit, the steps in an external and internal audit, and the inherent limitations. Now, this inherent limitations is an important part of your course because an audit never gives absolute assurance. You will see throughout the whole course, throughout all the videos, you will find that I have stressed on this fact repeatedly that audit does not give absolute assurance. And why? Wherever we studied any concept related to assurance, I have mentioned and explained that this is the reason, this is another reason, this is another factor why absolute assurance cannot be given. For example, when we studied sampling, when we studied risk assessment, when we studied inherent limitations, I have time and again mentioned that absolute assurance cannot be given. So this is very important in the whole syllabus also, and in this section especially. Why cannot absolute assurance be given? Due to these inherent limitations. And what were those inherent limitations? If I can just repeat on my fingertips, it was the fact that the auditor uses professional judgment, it uses sampling, and there's a certain audit risk involved. So these are the reasons why absolute assurance cannot be given. Then we studied a comparison of external versus internal audit. What are the difference in their objectives, in their methodology, in the reporting mechanism? We studied all that. And then the responsibility of the management and the auditor with regards to the financial statements. Now, management is wholly and solely responsible for preparing the financial statements. The preparation is not at all the responsibility of the auditor. In some jurisdictions, you might find that the external auditor assists the management with the preparation, but the auditor is not responsible for its preparation. If the auditor prepares the accounts and then goes on to audit, then there is that code of ethics element involved. What will come in? Conflict of interest. And what specific element of conflict of interest? The self review threat, that the auditor will then be auditing or reviewing the same financials that they prepared. So they cannot do that. This is one another important aspect of this section that it needs to be remembered. Then we talked about the users of financial statements, who are the various stakeholders. Then we spoke about the IFAC, AOFI, what role they play, the functions of internal audit department, what does internal audit actually do, the types of internal audit assignments, and we spoke about internal audit report and outsourcing. Can outsourcing be done or not? What factors should be considered? All these things. This section is another 15% of your complete syllabus, right? The important parts I just highlighted, and this section does not have much of practical implication. You will find that this section has more of theoretical concepts. These concepts will go on to be applied when you're actually performing the audit. So when we study module C, the audit evidence risk assessment, these concepts will be applied over there. So let's test how much we have learned from this section. This is the first question for this section. All right, so I have 8 answers. And majority of you have answered option C. So now, is there anyone who can explain why option C? Why not anything else?
We have a raised hand, and I will take Brother Ibrahim.
Assalamu alaikum.
Okay.
Assalamu alaikum.
Walaikum assalam. Yes, brother.
Alhamdulillah. Inshallah, I've chosen C because in the case of A and B, an auditor cannot audit an account he or she has prepared. In that case, it will be the threat of self-interest, self-review threat will come to play.
All right, good. So yes, as we just discussed, that the auditor cannot prepare the financial statements. So anywhere, any question where the auditor is preparing the financial statements, that automatically becomes a wrong answer. And they can only give an opinion. So option C would be the correct answer for this. All right. So this is the next question for this section. Now, if I look at the number of questions and the time allotted, each question you will have about 1.3 minutes to solve each question. So in this session, I'm giving you 1 minute for each question so that you can practice solving questions earlier and having some time to review your answers, or maybe go back to those questions that you have skipped out. Or maybe there would be questions that would be longer and they would take more time, and there would be questions that would be shorter, taking less time. So on an average, I'm giving you 1 minute per question in this session so that you can practice the timing also. Great. So we have majority people answering B, which is auditee's comments. Which of the following does not form part of the internal audit report? Opinion, auditee's comments, findings, and recommendations. All those who said auditee's comments, I would like someone to answer why. Why did you choose this option? We had 4 people who said B.
Brother Ibrahim wants to answer something.
Yes, Brother Ibrahim, please go ahead.
Yes, Jazakallah khairan. I answered B because an auditee is the one who has been audited. So there's no need for the auditee's comments to be part of the audit report.
All right, Brother Ibrahim. Let me just mention that the focus point in this question was internal audit report. And in our videos, we had studied the difference between internal and external audit, where it was mentioned that internal audit involves the auditee. The external audit does not. External audit will give an opinion, but the internal audit, they give findings, they give recommendations. And when they give findings and recommendations, then they definitely ask for auditees' comments. They do take their feedback also into account. So the focus point here was the internal audit report. That was the important word, internal. Had it been external, yes, auditees' comments would have been the answer. But since it's internal audit report, the opinion paragraph, because an internal auditor does not give an opinion. They give recommendations, they give suggestions, they give findings, observations. Opinion is given in an external audit report. So, once again, I will stress reading the question, finding out the key words in the question is very important. So it is you need to focus on what is the key word and then work on the on the answer, on the solution to it. All right, so I have another question from this section, from this chapter. Let's see how this goes. Okay, so I can see that people are divided between option A and option D mostly. Okay, I would like to know from the two participants who have answered option C, why did you choose this option? Why was option C chosen? Or is there anyone who would like to explain why option C cannot be the correct answer?
Sister Safina, you may look in the Q&A. Brother Imran is have typed a few, I think, questions or answer.
I
I think
cannot, I cannot hear you. Your voice broke.
you can see the Q&A. Brother Imran have answered, I think.
Uh, all right, the Q&A. Okay, so you want me to answer the Q&A also along with it. Great, I'll do that. Okay, so let's go to the solution of this question first, and then I'll go to the Q&A part also. So the correct answer is option A, material weakness in the internal control. Why? Because there was this high rating. When observations are rated high, that means there is high risk in that particular area. And high risk would definitely signify material weakness. If there had been an immaterial weakness or no weakness at all, then the rating could have been lower. It could have been medium risk, it could have been low risk, but not high risk. So high risk is always given to material or significant areas. Now, in this Q&A section, I have Muhammad Imran. He is saying that internal audit does not do to make comments is not their duty. All right, internal audit will not make comments. They will give observations. They will give their findings, and those findings are then given on to the auditee, and they will want to receive the auditee's feedback, because you see, internal audit is part of the organization. It is part of that institution, and they're working together. Internal audit's purpose, we had studied in this section, was to add value, was to add value to the organization's policies, procedures, risk management system. And they can add value only when they coordinate with the auditee, when they coordinate with the person doing that job. If I just go and say that you are not doing your job right, following were the flaws, one, two, three, these were the mistakes, and you're not doing your job right. Now, how will I add value this way? Because this is what external audit does. External audit comes in, they will review the whole transactions, financial statements, your policies, operations, everything, and they will give an opinion that, okay, the financial statements were true and gave a true and fair view, and they were in compliance with the Sharia rules and principles. All right. Or they might say that the financial statements gave a true and fair view except for this one area, and this is the observation that we have. That's all. They will not come and sit and discuss with you and tell you how to resolve it. So that is what external audit does. Now, internal audit has a greater role. They will tell you that this is where you're going wrong and this is how you should rectify it. Now, implementing that suggestion, implementing that recommendation is definitely the management's job. Audit is not mandated to implement that. They will just give the suggestion. Now, implementation decision, whether they want to do it or not, that will be taken by the management, definitely. But the auditee will be involved. Their comments will be taken, their feedback will be taken so that the audit and the stakeholder, the auditee, the operational person can come to an agreement that, okay, this is doable, this is not doable. You gave this suggestion, but from business point of view, this cannot be done. Or you gave such a suggestion, but from operational point of view, this is not practically possible. So for all this, you need to have those comments from the auditee. So this is the reason why internal audit will definitely have comments from the auditee. Okay, so I have another question from this section. Okay, so in every question, I'm getting a generic 8 to 10 responses. Where are the remaining 8 people? I can see 18 participants, and I want 18 responses to my question so that I can know how much more focus or how much more review is required. So we have a majority answer of option C, which is the preparation of financial statements, and that is the correct answer because preparation is not an auditor's responsibility. It does not fall in any sort of assurance engagement. Now that was the basics of assurance, audit, internal and external audits. In module 3, we move on to the specifics, to the exact steps, to the exact methodology of conducting the whole audit. So in audit procedures and processes, we started with client acceptance and retention, and we've moved on to audit planning and strategy, and then risk assessment. In each of these chapters, in each of these topics, there was a discussion and explanation of various concepts, of various theories, of various terminologies, along with examples and practical scenarios. Wherever a concept needed practical scenarios, they were also explained. How it can be done, how it cannot be done, how it should actually be done, the best manner, everything was explained. So the key topics that we learned in client acceptance and retention were how to screen the client, how to perform the initial acceptance procedures. We began with why would an entity want to change the auditor? Because screening can be done twice, either when it's a new entity having their audit for the first time, they'll have a new auditor, and the auditor will have that new client also. So the auditor will screen that client. Or the entity would be changing their auditors. For example, ABC Bank was being audited by PwC till now, and from this year it will be audited by EY Fordrose, EY, Ernst& Young. So when this change is occurring, now Ernst& Young will have to screen ABC Bank, whether that client is acceptable to them or not. So this is why then we studied why would an entity want to change the auditors? What were those scenarios? There could be disagreements between management and auditor. There could be a regulatory requirement. For example, in Pakistan, there's a requirement that every bank must change their auditors every 5 years. So after every 5 years, the firms get changed. So that could be one reason. So there were several reasons we studied. And then we studied how screening can be done. What are the processes involved in the client screening? Understanding the business, understanding the management, their integrity, their working style, understanding the risk involved, understanding your own capability, staff competencies involved. So, all these were screening procedures. Then we spoke about ethical considerations for accepting a client. And in this, the major part was speaking to the prior auditor, contacting the previous auditor. Now, can you do it? What are the circumstances under which you should do it? How should you go about it? The whole process, asking the management of the client that we wish to contact the previous auditor, contacting the previous auditor, asking them to give you things. The previous auditor will then go to the client and tell them that we've been contacted and we need to give those things, because after all, the client and the auditor is bound by confidentiality. If I have been the ex auditor of any financial institution, I cannot go about giving out the information to any other audit firm. So I need to get the permission from my ex client also. So this whole process we studied. Then we talked about the audit engagement letter. What are the contents? What are the mandatory contents? What are the additional contents that could be there? Then we spoke about the fee for professional services, how much fee should be charged, how do you determine how much fee should be charged, what are the factors that are involved, and we spoke about lowballing. We spoke about charging a lower fee to gain a client. We spoke about charging a lower fee for the first time to gain that client and then increasing it later on. We spoke about charging a lower fee than the previous auditor just to gain that client. And these practices are considered unethical in most of the jurisdictions until and unless there is a very valid justification. For example, the bank's operations have been reduced by 70%. Now the audit work will be reduced considerably. Here, the audit firm has a valid reason to quote a very low fee, because now their staff will not be needed that much, their resources will not be spent that much, so the expenses will be lower. So now the lower fee can be quoted. But just to gain that client from some other auditor, lowballing is very unethical. So these were the aspects we studied when we talked about client acceptance and retention. And specifically, the fee aspect is very important. You will find that scenarios can be developed out of that fee aspect. There could be practical scenarios quoting an audit firm asking for a lower fee, and following was the scenario. Here, the audit firm asked for a lower fee. Is that ethical, unethical, allowed, not allowed, allowed subject to certain conditions? So these could be the type of questions that come from this section. Then we moved on to audit planning and strategy. Once the client has been accepted or retained, once the engagement letter has been issued and accepted by the client, now the team needs to plan the audit, come up with a total plan strategy. So we spoke about developing an audit plan, how to start it, how to do it, what are the factors that need to be considered. The first and foremost was understanding the entity, understanding the risk. So we spoke about how to understand the entity, what are the things that you need to understand, specifically, for example, the regulatory environment, the laws and regulations involved, management's working style, management's integrity, and understanding the operations, the policies and procedures of the institution. Those were the things we studied under understanding the entity. So the audit plan was developed. It included entity understanding, it included the resources understanding, resources allocation by the firm, and it included the risk assessment process. Now, risk assessment was studied in detail in later videos, but yes, it was part of the audit plan. The timelines, the fee, everything was input into that audit plan. And this audit plan was documented in an audit memorandum. It's a comprehensive document which is developed right from the beginning of the audit, and it is constantly reviewed and updated till the end of the audit. So it's sort of a live document which you start with by the entity understanding, risk assessment, materiality, and team allocation, timelines, fee, everything is documented in that audit memorandum. And then you go on to design the audit procedures out of those things. What are the specific steps that I'm going to do? What are the procedures that I'm going to follow? I have this risk of overcharging of the income, overcharging of some fee or some commission over maybe locker services. And now, how am I going to address that risk? What specific audit step am I going to do that that risk is addressed and I find evidence that, okay, the overcharging is being done or it is not being done. So the whole audit procedures are designed and they are aligned with the risk identified. They are brought in line because every risk that had been identified, documented in that audit plan, in that audit memorandum, it needs to be addressed. It needs to be given an assurance upon that, okay, this risk does not exist. Or if it does exist, then this is the extent to which it exists. So that has to be done. So you align all the audit procedures with those risks. So this was what we studied in this chapter. Then we moved on to the detailed study of risk assessment. As I mentioned, audit plan was had the part of risk assessment. It was the documentation of risk assessment, and then we studied in detail. So we talked about the components of audit risk. Audit risk comprises of basically two risks. That is it's basically three risks. That is the inherent risk, the detection risk, and the control risk. So we spoke about those risks, where they are present, how they can be reduced, everything. And then we talked about assessing the risk of material misstatements. Now, when we know what type of risk can be, then we talked about how we will assess the risk of material misstatement. What are the factors that we will consider? Moving on, we went on to planning materiality. Now, materiality is a very important concept because an auditor's audit is based upon materiality. The audit procedures, the sampling, the audit evidence, everything will have the basis, the foundation on this materiality. The extent to which that will be done will be depending on this materiality. So we discussed that there is an overall materiality and then there is a tolerable error. We spoke about overall materiality being the overall amount which can be tolerated. For example, I could say that 30% of my income is my materiality. Now, any misstatement or any errors that are below 30% of the income, they can be tolerated. They do not need to be investigated a lot or worked upon a lot. So my audit procedures can only be designed around the amounts that are greater than 30% of the income. This was an overall materiality, and this is done at the planning stage. Once that planning materiality is in place, Then you drill down to each account level and you figure out a tolerable error in that account level. Because it is highly possible that in one specific account, there is a high risk of material misstatement, but any amount in that account is not higher than the 30% of income. It's lower than that. Yet that account is a high risk account. So what do? You figure out a tolerable error, a level that can be tolerated for that particular account. So overall, planning materiality, and then for every account, the tolerable errors. And then the audit evidences, the audit procedures are designed around this materiality. To what extent do I need to work is designed around this materiality, along with the risk assessment. Then we spoke about audit procedures. Audit procedures are broken into two: test of controls and substantive procedures. So in this section, we spoke about test of controls. Test of control is the first step for an audit procedure. Why? Because if the control activity on any process, on any procedure is working effectively and efficiently, then errors and misstatements will be very few. So if I find that the test of control is working 99%, then maybe I will not have to test each transaction, each amount individually, or maybe my sample size for transactions can be reduced. So this is the importance of test of controls. And then we talked about the various methods that we can use for testing controls, which were inquiry, inspection, observation, reperformance. So those were the methods. And these methods are important. This test of control part is important because you can get scenarios where a process is being done and you might be asked to identify which specific procedure is being used. Or you can be given a scenario and asked to, you know, asked to mention that which procedure you would use for the audit of this scenario. So it can be two ways. It could be an audit step given to you, and you will be asked to identify which category this audit step falls into. Is it observation? Is it inspection? Is it reperformance? Or you could be given a risk or a scenario and asked to tell what procedure would you use to audit this scenario. So this test of controls, the method of test of controls, this is very important in this section. Then we spoke about professional skepticism, fraud, and irregularities. So now let's go on and do some practical questions on this and see how much of a review or how much of a further study is required for this section. So this is my first question for you all. And I would very much appreciate to get more than 10 answers this time. Great. So this time we did manage to cross that 10, and I have 12 answers. Okay, so I can see that people are very much divided, very much evenly divided amongst A, B, and C, which is after, before, and any of the two. Now, you see, when you're contacting the outgoing auditor, you're doing it so that you can identify any triggers, any warnings about the prospective client. And if you do that after accepting the engagement, then you cannot do anything. You've signed the contract, you've signed the engagement letter, you're going to do that audit now. And if you find out that yes, this entity is involved in fraudulent activities, now what's the point? So the point of contact towards the outgoing auditor has to be before accepting the engagement. So that if there are any risk factors, any warning factors, any triggers, you know beforehand, before taking up that engagement. There could be the factor that the entity could not afford the fee of ABC auditor and they can afford your fee, so they're accepting, so they're changing. But there could also be a factor that the outgoing auditor had a very valid point, very valid qualification to the audit report, which the management did not agree with, and they're changing the auditor. They're like, okay, you can just leave, we are terminating you, we'll get someone else who can do work our way. Now, if you get to know this after accepting that engagement, then there will be no point in it. So, the ideal time is before accepting the engagement. Okay, so the next question. Great. So, I had about 9 responses to this question, and majority is correct. Both the management and the auditor have the right to appoint new auditors or decline any further appointments. Yes, they have the right, they can appoint new auditors for any reason, or they can decline the further appointment for any reason also. So they both have the right to do it. Okay, so over here also majority did answer correct. Audit plan is the set of instructions, specific procedures. I would like to know why did people who chose option A chose it. If there's anyone who would like to, explain their thought process behind this, why option A? All right. So let's go with this that audit strategy is something that is a overall direction that the audit will work this way. Maybe the resources or the overall timeline and the objectives of the audit will be achieved in this particular direction. So
Hello. Okay. We have a short moment, and I think Sister Safina will be joining us shortly. Just wait for a while. Okay. So we have an interruption in the session, and she is not available, but we will wait for her to come back. I'll communicate with her. Thank you for the patience. I hope at the moment people who are answering the question and the way she is explaining in detail and the reasons of why the answer is correct or wrong makes sense. Muhammad Mohibul Islam. Yes, brother Muhammad.
Assalamu alaikum.
Walaikum Assalam, brother Muhammad. Okay.
Brother, I want to express that we need much more time on BRE.
Oh, you
Because
need much more.
BRE is somewhat a very difficult subject.
I see.
So, and if it is possible to provide us the slide and question, it will be great for us.
Okay, no problem.
Slide and the questions.
Okay, brother Mahibul Islam, inshallah, we will combine them. Basically, people have been attending the courses from day 1, day 2, and today is day 3. So what I will do is basically I will combine them all together, and then I will update them, and the presentation as well will be
Because
sent to you.
I will be appearing the BRE and audit in June.
Oh, you're appearing in June. I see. I see.
Yeah.
Okay.
So it will be better for me if you provide the sheet and question.
I see. I see. Okay. Sister Safina have just replied, Mr. Zia, and she's saying that she is joining in a couple of minutes. So it's some connection issue.
Okay. I think, Hassan, it is better we distribute each of the subjects separately.
Yeah, it will be distributed separately. It's just once this whole slot is finished, after today, inshallah, I will share them separately.
Yeah, inshallah. But as he suggested, like some of the students are appearing in June, so this will be of benefit to them, inshallah.
Sister Safina is joining in a short while, so we'll just wait for a few minutes.
Brother Abu Bakr Ardu, as Mr. Hassan just said, from today onward, he will work on distributing these course sessions, and inshallah he will send it to you. Okay, don't worry.
So we have Sister Safina back, inshallah. Let's resume the session where we left, Sister Safina.
Yes, my apologies. I got disconnected due to some connectivity issues. So, all right. So we were discussing this question, and we spoke about the fact that audit strategy is the overall general strategy, and audit plan is the specific set of instructions, the specific guidelines on how the audit is going to be conducted and done. Now, this is the next question for you all. Brother Essen, I think I'll need the co-host option. Okay. So, yes, the majority answer has been option A, and that is the correct answer. We just talked about it. What is an audit risk? What does it comprise of? So, this is one important part of this section. Okay. So, moving on, we have accepted the client. We have developed the audit strategy, the plan, the document where the guidelines, the steps have been set up. Then we've also done the risk assessment. We've identified those high risk areas, those critical areas which will need more work. We have conducted the test of controls. We now know where we need to add more procedures. We need to do a higher level of audit and where we can go along with lesser procedures or no procedures at all. Now is the time to do the further testing, gather more audit evidence. Where the controls were less efficient, less effective, we will move on to substantive procedures. As I just mentioned, audit procedures are of two types, test of controls and then substantive. So we are now going to move on to substantive procedures. That is another method of gathering audit evidence. In substantive procedures, we have two types of processes, two types of steps or procedures, you could say, analytical and test of details. So in this video, in this session, we spoke about analytical procedures and test of details. What are they? What is analytical procedure? What is test of details? Analytics is basically forming some relationship between the information, between the data, or identifying any discrepancy, any trend. So that is analytics. Analyzing the data, the information, and coming up with any discrepancies, any observations, any issues. For example, if I say that the industry average of the UAE banking industry is about 30% of write offs in a year. So 30% of financing is written off in a year in the UAE banking industry. Now, I am the audit supervisor and I'm auditing XYZ Bank in Dubai, and I perform an analytical procedure of their write offs. And I find out that during this current year, the write offs of XYZ Bank were equal to about 45% of the financing. Now, that's an alarm bell for me. That's a trigger for me. That, okay, my analytics said that the industry average is 30%. Now, this bank has 45%. Why? Were there any control lapses? Were there any operational lapses? Were the financings that were being given, were they not correct? Or have the write-offs that have been claimed, are they not correct? Now I need to dig in further. I need to investigate further. I need to talk to the management. I need to gather more evidence. So analytics give you that ratios, that comparisons, that averages, or that trends. Then we go on to the test of details, which is testing the transactions, which is testing each and every account head. And how do we do these tests of details? It is the same as test of controls. We use inspection, we use observation, we use reperformance, recalculation. So these are the methods. For example, you could say observation could be that a person is doing that particular work and you are sitting there beside that person and looking how that work is being done. That is observation. You could do inspection. Inspection would be reviewing the Murabaha agreement maybe for any terms and conditions that are Sharia non-compliant. So that is inspection. You're gathering evidence through inspecting a document. Then you have reperformance. You can do that particular step yourself again. For example, bank reconciliations or account reconciliations or customer reconciliations. So those can be performed by you also. You can take up the raw data, make the reconciliation again, and then check with the auditee that they made that reconciliation, I made it, okay, There are no differences. That means that the work is fine. There are no issues. But if there are, let's say the difference is about 10% of the income, so that was also below my planning materiality, which was 30% of the income. So I don't even need to investigate this a lot. Now, if the difference is about 40% of the income, that is where I need to investigate further. I need to work on more. I need to talk to the management. I need to raise an issue regarding it. Then there is reperformance. We've done that. Then there's recalculation. You can recalculate the figures, the maybe the financing schedule. You can redo them and recalculate all the amounts and come up with the differences, if any, and if not, then fine, good. So that is how you do test of details. Those are the ways of obtaining evidence. Then we spoke about the forms of evidence, the quality of evidence. The evidence, what is the quality of good evidence? Now, this is very important over here because an auditor is going to base their opinion on that particular evidence. Now, that evidence needs to be highly reliable. There are two basic qualities: sufficient and appropriate. Now, sufficient refers to the quantity. For example, you have 1 million cash deposits every day, and you check out of those, you check just 10 cash deposits. Now, that is not sufficient audit evidence, maybe. You need to increase your sample size. That is the quantity of evidence that you have. And then there's quality of evidence. Now, which factors affect the quality of evidence? We studied that. We studied that the evidence which is from third party is more reliable, from independent sources is more reliable, written evidence is more reliable, evidence obtained directly by the auditor is more reliable. So this is the quality of evidence. These are the factors which make the audit evidence more reliable, a better quality evidence. And then we studied audit sampling. Audit sampling is a very important part of the audit because the extent of audit, as we talked about, the sufficiency of audit evidence, it will depend on this audit sampling. How well you choose the sample, how well you identify the sample size, that will determine how much of a sufficient audit evidence you gather. So we spoke about statistical sampling, non-statistical sampling, and the methods of sampling, which were random, block selection, haphazard sampling. Then there was this monetary unit sampling. This topic, this area is also very important. You could be given questions in the similar manner as I explained earlier, that the sample selection scenario can be given to you and you could be asked to identify which method would suit the best, or you could be given the method, the whole description of sample selection and asked to identify which method is that. For example, I can ask you, I can tell you that I have selected a sample starting from the 10th transaction, and from then onwards, I have selected every 100th transaction. Now, what is this? This is this is block selection, you could say. So you will be asked to identify which method was used, or you could be asked to identify that in this scenario, which method should be used. So this is another important area. Then we spoke about audits using information technology, using computer assisted audit technique, which is CATs. What are the advantages? What are the disadvantages? How they can be, how information technology can be incorporated into audits these days. Then we spoke about some specific instructions, some specific guidance regarding audits of Islamic financial institutions. Most importantly being that compliance with Sharia rules and principles should be tested, and competence of Sharia supervisory board cannot be challenged by the auditor. This is the most important guidance. You cannot challenge the competence of the Sharia supervisory board. Then we moved on to studying specific areas of audit and their procedures. Audit procedures, common and most important significant audit procedures of all these areas of non-current assets, Murabaha, profit income, current deposits, restricted investment accounts, unrestricted investment accounts, all these have been discussed. So let's do some questions now pertaining to these areas and test how much of a practice you need to do in this area now. So this is the first question. Okay. So I have a majority saying both 1 and 2. That is, where did my screen go? All right. So I have a majority saying both 1 and 2. That is studying the minutes of the meeting and inquiring from the entity personnel, which is the correct answer. So these are the type of questions that can come from audit evidence and audit procedures section. Telling you some scenario, asking you what you will do, or telling you that you've done this and asking you to identify the process or the procedure. What was it? Okay, so this is the next question. Great. So I have 7 answers and I can see that people are equally divided between option B and option D. B is 2 and 3 and option D is 3. So now responses to the confirmation letter circularized. As I just explained, evidence obtained directly by the auditor. That means that the confirmation letter was sent by the auditor directly and received by them directly. They are more reliable. Now, written representation from the management, they can be reliable only when further audit procedures cannot be done. When there's no other option, then this evidence is reliable because you have no other option. But when there are no further audit procedures, when there are other options, there are other audit procedures, then written representation from the management will be less reliable. So yes, option number C is the correct answer for this. Now we have the last two sections of our syllabus. That is using an expert, which is part of your module 3. And here we talk about using the work of an expert. It could be a management expert, maybe because, for example, a financial institution has to engage an expert to value the Murabaha inventory. It is something that they cannot do. They are not the expert in that. Or maybe the auditor needs to hire an expert to value the Murabaha inventory and find out that yes, the inventory was equivalent to the amounts financed. So this is why an expert needs to be involved in an audit. And then there are the responsibilities of an expert. What are they supposed to do? What steps are they supposed to take? They're supposed to ensure that whatever valuation, whatever assignment, whatever task they're undertaking, they have the capability to do it. They have the competence to do it. Then there are certain ethical considerations. The expert should also be independent. The expert should not have any conflict of interest with the work, with the entity. So this is all that we discussed. It is a very small part of the course, not that important, but it could form the part of a scenario, of a practical question, which is why it was included. Then we have our module 4, which is the last step of an audit. You have done the audit from client acceptance to planning to risk assessment to gathering all the audit evidence. Now, what do? The auditor gives an audit conclusion and an audit report. So, in this section, we talked about all the detailed contents of an audit report, both the internal audit report and the external audit report. And as we saw earlier, the major difference between these two reports is the fact that the internal audit report contains suggestions, recommendations, and auditees' comments on it. And the external audit report will just have an opinion. Then we talked about the various types of audit opinion that the external auditor can give. It could be a modified opinion or an unmodified opinion, depending on the audit evidence gathered. And also, the modified opinion could be either a disclaimer of opinion, a qualified opinion, or it could be an emphasis of matter paragraph. We discussed various scenarios, various situations where each of these type of opinion will fit in. Why will they give a qualified opinion? Why will they give a disclaimer of opinion? Why will they give an emphasis of matter paragraph? So there were various scenarios that we discussed in detail. And then we talked about the management letter. An auditor gives an opinion in the audit report, but if there are any significant issues, significant matters, critical matters that need to be raised to the management, there are significant control lapses, weaknesses that need to be informed to the management. They do it through a management letter. They give all their detailed observations that these are the issues 1, 2, and 3 that you need to address in your internal control system or in your policies or in your operations, and so that your audit report does not qualify the next time. So that is communicated through a management letter so that it does not form the audit report and it does not get distributed to other stakeholders. This is something that is internal, an internal document. So these are the things that we discussed in these last two videos of the whole course in module 4. So let's take some questions based on these two sections, audit expert and audit report. All right, so I have 6 answers on this question, and I can see that majority did answer option D, but there are some people who selected answer option A also. I think people who selected option A missed out on this not. As I mentioned right in the beginning, my second question was based on this factor, and over here this not is highlighted. So when I say that the auditor is considering specific ethical issues, and which of this is not true, then of course the expert should maintain good reputation regarding confidentiality. Because if an expert is famous for giving out data, then I will not hire that expert. I will be giving my information, my confidential data, my internal data to that expert to review, to evaluate. And if he does not have that good reputation, why will I hire him? So it is option D that is the correct answer. Okay, so next question. All right. So I have a majority answer and then I have a divided answer. Let's discuss each option. An emphasis of meta paragraph is being included. Now, limitation imposed by management to perform certain procedures for which alternate procedures were available, that's all right. That is not something that needs to be highlighted. There were other procedures available. So that could be done. Now, to highlight non cooperation by the management during the course of audit, to highlight significant litigation involving the company outcome of which cannot be assessed at the time of issuance of auditor's report, and to highlight this litigation which cannot be assessed at the time of issuance of report and management has refused to disclose in the financial statements. Now, these are the three scenarios which I would say could be the answers. And the answer is scenario 3. Because to highlight non cooperation by the management, that means the management is restricting you, it is stopping you from doing something. So this is where a disclaimer of opinion comes in, where there is limitation of scope, where there is restriction on work. You give a disclaimer because you cannot give an opinion on something that you cannot do, something that you're not being able to do or the management is not allowing you to do. So to highlight non-cooperation, you will give a disclaimer of opinion. Now, where the management has refused to disclose the same, so this is where a disagreement is coming in now. And when there is a disagreement, it will go either to a qualified opinion that the auditor has reviewed everything and everything is true and fair, except for this one thing, which we feel that the management should have reported and they have not done. Or it could be that if it is so significant and so important, then it could be a disclaimer also that we cannot give an opinion because management is not agreeing to this. So an emphasis of matter paragraph can only be included when there is significant litigation involved and it has been disclosed. Now, auditor and management are in agreement with the result now. So this is where an emphasis of matter paragraph can be involved. Now, this is another question. Great. So I have a majority of the answer, and majority of you are saying that it should be a reference made in the note to the financial statement. Now, why not an emphasis of matter paragraph? Because we just studied a situation where we got an answer that there was a litigation and there was an uncertainty in the outcome, and emphasis of matter paragraph was being included. So why not over here also? It is the same situation. There is a litigation, there's an uncertainty. What should be done? Emphasis of matter paragraph. You highlight this matter that the audit report is not being modified, but this is an important matter that needs to be considered. Now, these two questions, I framed similar questions to show you how the questions can be framed one way or the other way. In the previous question, we had the emphasis of matter paragraph given in the question and the scenarios where it should be given. And you had to choose the best scenario. In this question, the scenario is given and you had to choose what type of modification or paragraph should be included. So for audit conclusion and reporting, both questions could come in both manners, both ways. It could be either identifying the modification or the type of paragraph or the type of opinion, or you could be given a type of opinion for four scenarios and identify which scenario fits best for that type of opinion. So that is all from my side, and the floor is now open for all of you to ask any questions. I have one question which is in the Q&A box. It is succeeding to this CIPA will bring which kind of opportunity? So let me tell you that Islamic finance is a hugely expanding industry worldwide, not only in Muslim countries, but in non-Muslim countries also. You will find Islamic banks from UK to Canada to USA to Australia now. So being a CIPA certified professional, being someone who is an expert, a subject matter expert in Islamic accounting, in Islamic auditing, in Islamic governance and Sharia standard, you will have a certain edge over professionals in many fields, in many locations, and in many jurisdictions. So I would say that it will bring a huge a new world of opportunity for anyone who's going to qualify CIPA. So, are there any more questions? Let me just end this presentation and then we can take questions.
All right, thank you very much, Sister Safina, for your session. And then I believe the way you have explained each and every module, four module, and each and every chapter, and what are the cores of those chapters, and what you have discussed on those chapters, that really makes sense. And then the why CISA is important is actually defined the whole way you presented. And then the Q&A and the poll system was, mashallah, good, very systematic. People who are attending, I believe they are valued, and they are people who are not attending, they have missed a great opportunity listening to you. So, is Brother Zia, Assalamu alaikum, if would like to say a word to people who are attending.
Yeah, wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Ahsan. And thank you very much, Ms. Safina, for such a nice presentation. And thank you very much all for your participation. We know this is a working day, so many people are not able to actually, in terms of the attendance, we don't see that significantly high attendance, but this is a representation of all. So as Sister Safina mentioned, that we give you next few minutes before we conclude the session, we give you an opportunity to ask any question that you might have, any further guidance that you need from Sister Safina. You can feel free to ask. And those of you who are actually AAOIFI, who are TAIF student, they can still ask questions from Sister Safina through the portal. Those who are not TAIF student, we invite you to register with the course. This is like you have seen the quality of the course. Significant time and effort is being invested on this course by all the instructors and team at TAIF to make sure that you get the best out of this course. So I would suggest all of you to register. Similarly, all of you who are not registering for, who are not appearing for in June, who are planning to appear in the summer examination, you may, if you have not registered with AAOIFI, TAIF is a AAOIFI registered examination, approved examination center for examination registration. You can do the exam registrations online. And if you register through TAIF, you will get a discount in AAOIFI fees, which if you are in a non-GCC country, can be up to 70% of the AAOIFI fee, which is extremely significant. I think Brother Muhib has some question. Anybody else other than Brother Muhib who would like to ask any question before we take Brother Muhib? Please raise hand. There is one option of raise hand there on the bottom. You can, yeah. Brother Muhib,
Assalamu
yes.
alaikum warahmatullah.
Wa alaikum assalam. Yes, Brother Muhib.
I have the pleasure to join this session, and I have enjoyed and learned a lot. And I will be appearing and seeing our fee exam of CIPA. I will attend sorry, I will attend BRE and Audit and Assurance. So today's session was very much helpful for me, and especially this session which Sister Safina has discussed, and thanks to TAIF. And I request Sister Safina to advise me some about audit, because I think audit is a very difficult one for me.
Did you understand the question? What is the question, Brother Muhib?
My question is to get some advice about appearing the exam, because in 29th the exam will be held in 29th.
All right.
Okay.
Brother Mohib, you would want me to give you some tips and techniques for the exam. My first tip is read the question very carefully. That I've been repeating throughout the webinar today also. Read the question, understand it. If you want, underline the keywords from the question, and then go through each and every option very carefully also, because we tend to miss out on the keyword in the question or some keyword in the options also. As I showed you in my questions, there are options that could appear very confusing. There could be two or more options that could appear as the correct answer. Be very specific in choosing the correct answer. The second tip that I would give you is that review the whole syllabus. Do not leave out anything on the chance that this is a very minor topic, or this is something that is not relevant or something not important. So at least once review the whole syllabus and then focus on the important areas. So people tend to have this selective study strategy that, okay, this is just 2% of the course, so let's leave out this section, or this is just 5% of the course, let's leave out this section. Do go through each and every section at least once first. And thirdly, I would suggest that I think AOFI still does provide a mock exam. Practice that mock exam under timed and similar examination conditions. Take up that paper, take up those 65 those questions, time yourself according to 1.3 minutes per question and solve those questions, and then assess yourself where you stand. Because when we practice, we tend to practice without any timing, and then when we go into the examination, we find that our timing gets out. Now our questions are not being able to be completed or anything. So practice in a timed environment. These are my three most important tips. for preparing for any examination that I have prepared till now.
Thank you for your nice advice. And perhaps we are the first batch from Bangladesh to appear the exam online. Thank you
Okay.
again. Assalamu
Okay,
alaikum.
thank you. Wa alaikum assalam wa
Walaikum.
rahmatullah. Okay, I think there is no further question. So I give 1 minute to if anybody make up your mind and if you have any question or comment before we conclude this session. So thank you very much. There is no further questions. Thank you very much, Sister Safina, for this nice session. We really appreciate and thank you very much all. And this brings this session to an end. Assalamu alaikum wa rahmatullahi wa barakatuh. This session is concluded. Thank you. Thank you, Sister
Thank
Safina.
you.
Thank you very much. Thank you.
Thank you, Zia Saab, and best of luck to all the people who are attempting the exam.
Thank you. Thank you. Assalamu alaikum.